Today I will tell you for the income and expenditure account. Yesterday we understand the receipt and payment account. When you know how to make the receipt and payment account, then by that you will create the income and expenditure account. Your all the payment should be recorded mostly in the side of the expenditure, and your all the receipt mostly recorded in the side of the income. The expenditure is in a debit side, then amount block, then income, and then amount block in the credit side. Got it? Then now see, in a expenditure mostly we should be go with the two, and in income we should be go with the buy. Then two salaries, charities, rent, donation paid, stationery, loss on sale of asset, depreciation. These are major expenditure. And then subscription, donation received, admission fee received, grant received, rent received, interest received, and profit on sale of asset. It will be in the income side. Now see, if your income side total will be exceed than the expenditure, then you have the surplus. And if your expenditure side total is exceed than the income, then you have a deficit. Now come to the question, that is from the T.S. Grewal book, question number 46. From the following receipt and payment account of social club and the information supplied, prepare income and expenditure account for the year ended 31st March 2021 and balance sheet as that date. The receipt and payment account, you will see in a receipt side you have a opening balance, that is a 7,000, subscription current year, that is a 2,000, 20, 21, 20,000, then 19, 25,000, and 21, 22, that is a 4,000. Higher of the ground 14,000. Then surplus from entertainment event 8,000. Sale of old newspaper 2,000. If you try to look your payment side, then salaries 28,000, general expenses 6,000, electricity charges 4,000, books 10,000, newspaper 8,000, and your closing carried down balance is a 4,000. Now see the adjustment. The club has 50 members each, paying an annual subscription of 500. Subscription outstanding on 31st March 2018 were 6,000. On 31st March 2021, salaries outstanding amounted to rupees 2,000. Salaries paid in the year ended on 31st March 2021 included 6,000 for the year ended 31st March 2020. On 1st April 2020, the club on building valued at 2 lakh and furniture 20,000 and books 20,000 provide depreciation on furniture at 10%. Now see the income and expenditure account first. Your pro forma, you should be go with the in the books of New City Club income expenditure account, and for the year ended 31st March 2021, your two sides, debit and credit. Debit is having the expenditure and credit is having the income. Now in a expenditure side, first you should be go by the payment. Question, you have salaries, that is a 28,000. Now you have the adjustment on the salary. Okay, the adjustment is what? The 2,000 salaries outstanding, so you should be 8. Salaries paid in the year ended 31st March included 6,000 for the year ended 31st March 2020, means last year outstanding. You should be just deduct it. Current year outstanding you should be 8, last year outstanding you should be deduct. Got it? Then you have a 28,000 plus 2,000 minus 6,000, but one more is there, that is what here it's given. See the salary is having any other adjustment. Then you have only like this outstanding 2000 salaries paid in the year ended 31st March 2021 included 6000 for the year ended 31st March 2020. So then your total salary is simply 28,000 plus 2,000, that is a 30,000 minus 6,000, then 24,000 will be recorded in the expenditure amount block. Now your next is the general expenses. No adjustment, then you should be record 6,000 only. Then the electricity charges, no adjustment, then only simply you should be go with the amount, that is a 4,000 rupees. Then you have newspaper, that is 8,000, you should be record 8,000. Now you have the furniture, then depreciation 20,000 into 10 by 100, that is a 2,000. Now come to the point, the subscription receipt side you will see. Then you will go with the income subscription, how many number of members has to be there, 50, and what they will give to you, 500. Then your total subscription will be go out 25,000. Here what it will be returned, 20,000. 20,000, and then you know very well the 6,000 is outstanding, and then remaining should be there. Then you have a need to go simply like 50 members and 500 each, then 25,000 will be out. Now see, the next one is your next one is for you is a, that is a hire of ground, and what you can get it, 14,000 rupees hire of ground, you should be get 14,000 rupees. So then rent received from the use of the hall you should be right. Then profit from entertainment its return, that is a surplus, then 8,000 you will record. Then the sale of old newspaper, then 2,000 you will record. On a screen it's available. Now see, your income is exceed than the expenditure, then your income total is a 49,000. Then you will deduct the 49,000 by the total of the expenditure, then you have the balancing figure, that one is calling the surplus, that is a 5,000. Now the opening balance sheet you will create on the 1st April 2020. Under it you will write outstanding subscription, building, furniture, books, and cash and bank, opening cash and bank. Then salaries outstanding is in a liability side. Then your total of the asset should be deducted from the liability. Then you have the capital fund, that is a balancing figure 2,47,000. Now the balance sheet on the 31st March, again your subscription, that is 25,000 minus 20,000, 5,000, 6,000 minus 5,000, that is a 1,000. Total 6,000 should be go out. Building 2 lakh, furniture, then deduct depreciation, book, then what you will purchase aid, then closing balance of the cash and bank. Then liabilities side, advance subscription, outstanding salary, then capital fund plus surplus. Then you should be go with the total of both the sides, both will be equal to like 58,000. That is your sum relate to income and expenditure account, opening balance sheet and closing balance sheet. Okay, hope so positive, I think you get it easily.